So the Bitcoin halving cycle is something that in the Bitcoin space we've talked about consistently about every 4 years, or not even really about, like almost like clockwork. It seems like we have, a peak and then a trough. And at that time, the amount of new Bitcoin being mined every day gets cut in half. And a lot of people have said that supply-demand imbalance or shock or shift is sort of what creates these highs and lows in that Bitcoin space or in that cycle. There's a growing narrative that I tend to agree with that the 4-year cycle is basically dead. And maybe the 4-year cycle was always a meme and it wasn't really about the 4-year cycle. What's your take on that?
Well, look, I think doing 4-year cycles on an asset that's not even 20 years old is a little bit aggressive. And certainly there
we don't have enough data points.
Correct. There have not been enough 4-year cycles to declare a 4-year cycle with any degree of empirical certainty, if I could be so humble as to say that. There's something called a hyperstition, which is when people believe something into existing. And the 4-year cycle is one of those phenomena where when you think about emission schedules and you think about the role that miners play in the ecosystem, et cetera, there has been a grain of truth to it historically, and folks believing in the 4-year cycle likely precipitated more of a 4-year cycle. That being said, Bitcoin has had so many new adoptees and new investors and fresh eyes on it these days that I'm not sure people are as immersed in the lore of things like the 4-year cycle, the way they would have been in past Bitcoin bull runs. So when you lose that shared belief among the new investors, coupled with the fact that miners now are only accounting for 450 Bitcoin per day at the current emission schedule, it does take a little bit of the sheen off the 4-year hypothesis. So I'm inclined to agree with you that while it was perhaps a helpful heuristic historically, and while we are on a run, I think that part of the industry maturing is that we may be moving into a 10-year super cycle. We don't know yet. It's too early to tell, but the composition of investors is certainly changing in a way that's probably making it a little less predictable than it used to be.
Yeah. I think to the point you made, I think is very accurate, where people believing it to be so sort of almost then reinforces it to be so. And I see it all over. People ask me all the time. I see it online. A lot of people think that they should not be buying right now, or they should even start selling right now because we're at the peak of the cycle, as if like it's just going to happen on that day. And so to your point, that's sort of like this self-fulfilling prophecy. Like they're not buying or they're actually selling right now because November is always the peak every year. November, 18 months after the halving. And that could sort of force a sell-off even if the sell-off wasn't coming, right? So that's certainly there. Now, when the halving supply gets cut in half, to your point, 450, it's not that much. The supply-demand imbalance is so great, between ETFs and treasury companies, institutions, it's somewhere, it ranges 5 and 10 times more demand than the new supply is being created. So you cut the supply in half, it's inconsequential. Yeah. So for the average hodler who's thinking about the price of Bitcoin, maybe that kind of goes away. And I would argue that it's the global liquidity cycle that's in the driver's seat here. That's the dog wagging the tail. And obviously, when we had the last peak in November 2021, we were in a different world. We had just seen record inflation. Jerome Powell came out in November, announced he was going to start hiking rates, and he hiked rates at the fastest rate hiking cycle in history. And today, he's not hiking rates. He just announced he's going to start cutting rates. So it's like we're completely different. And so for the average hodler, maybe the price stays up the same. But from a Bitcoin miner perspective, you do have to be prepared for the emission, as you call it, or the new inflation rate, to be cut in half.
Yes. So it's interesting that you bring in M2 and monetary supply as well as the Fed rates. The Fed rates are interesting for miners because, again, we build heavy infrastructure. So, of course, we're very mindful of debt and things like that. We do pay some of our bills, obviously, in fiat. And so we're very cognizant of where fiat is trading and what direction it's heading. The market is already awash in capital. And so adding rate cuts is going to exacerbate that realistically. This seems to be consensus. We'll see where that capital goes. It's been an interesting time because you've seen almost this U-shape where I can't recall a period of time where gold is hitting all-time highs, and so is quantum. This is an interesting barbell. You're seeing these quasi flight to safety ideas that are going to all-time highs. You're seeing Bitcoin near an all-time high, gold near an all-time high, silver all-time high, etc. But then you're seeing quantum up, you're seeing flying cars absolutely ripping. The fringe risk on tech and the risk off assets, everything is rising, which makes you wonder, to the point you've been making, if in fact it's just the dollar falling, and we're really just seeing the impact of debasement. Because although Bitcoin is in all-time highs in dollar terms, Bitcoin is not yet an all-time high in gold terms. And I remember going on some media tours maybe 3 or 4 months ago, and some interviewers who are new to Bitcoin would ask me, Matt, where do you see this going? And I like using gold as a metric. I think Bitcoin, I can extol the values of Bitcoin as being far more useful than gold is, but it's a nice benchmark. Gold at the time was at 21 trillion and we were at 2 trillion, and that seemed like a nice 10x. Gold today is around 27 trillion.
Yeah.
So we keep chasing this high. So I guess that creates more of a headroom for Bitcoin. There's more room to advance compared to the big brother of gold, is that trad store value there. But time will tell, to your point, if these cuts precipitate more of an uptick, or if people start realizing, to your point, that maybe we have hit a peak.
Yeah. But how are you as a Bitcoin miner planning for the new supply of Bitcoin being cut in half? Theoretically, I would just think, back of the napkin math, that the price of Bitcoin has to double if the supply gets cut in half for you to stay at the same profit margin.
There's an old proverb that you can't control the wind, but you can adjust your sails. So as we look at the halving coming up in 2.5, 3 years.
Right. Still a ways out.
It's still a ways out. It'll be here before you know it. But we are already being cognizant of how do you adjust your sales. So as we think about where we would choose to deploy capital, knowing that it would take some time to get the sites up and running, shorten the runway pre-halving, we need to be very thoughtful about those expenses, even today. And these decisions made today will have decisions for quarters to come. So we're very aware of that. And I already factor that into some of our CapEx discussions. We have a roadmap to get to 50 plus exahash if we so choose. That being said, as we look at the opportunity to just buy spot, that could be compelling as well. So we're constantly balancing the buying spot versus buying miner trade. The other bit of the why buy miners trade that I think is relevant to your question is the last halving, the literal day of the halving, by the way, was our best ever revenue day for mining, best ever. We had transaction fees 5, 6, 7 times what we were making in terms of the block subsidy. That to me was a foreshock. So as I think about the next halving, I don't know yet what that transaction fee volume will look like. But not only do I anticipate that Bitcoin will have doubled by the next halving, and even if we go through some sort of mini winter, I think the next halving is a pretty appropriate time for that doubling effect. You're also going to hopefully see an uptake in that transaction fee volume as well. So there'll be a double whammy. There's the need to get simply appreciation on the underlying asset. But if we can get any kind of increased velocity in the usage or the utility of Bitcoin itself, that actually rewrites the model. So rather than us sitting here and conjecturing about a 450 decline mathematically to 225, just constantly getting macheted every 4 years, we start to wonder about what does it mean to own the future of what's effectively the Swift network on Bitcoin, and what is the value accrual that a Bitcoin miner or someone with massive amounts of hash rate would get from that network.
Yeah. Speaking of fees from the network, I believe today, well, I don't know when this recording is going to go out. So at the time of this recording, we had the V30 get pushed through from Bitcoin Core.
Great.
And that increases the op size got put in as a template, standard, default, I should say, which has a lot of people on both sides of the aisle. It seems like one of the reasons they did that would be to help miners create more fees. What's your view on that whole debate?
You're making an astute observation, which is that with the adoption of this upgrade, miners do win. There is a likelihood that the transaction fee, or just the amount of things that are inscribed on the blockchain, will increase. As miners, we are almost a service provider or infrastructure. People want to go on the toll road. It's not my business to ask where they're coming or where they're going. It's my job to process those transactions and really keep the toll road or the network safe. So for us, and secure. So for us, I take a macro view that there are lots of developers on both sides of this situation. I see the merits to wanting to really restrict what Bitcoin is for, but at the same time, I think a big part of the crypto libertarian ethos is letting people do what they want to do if they're willing to pay for it. And so if people want to really take advantage of these adjustments that have just been made by the upgrade, we're going to support where the community is indicating that it wants to go. Again, miners, you need to remember, are very conservative. So for us, the most important thing is that the blockchain stays up, stays secure, is defensible against any sort of 51% attack. We think, while we think spam is a problem, I think an even greater problem would be anything that would kind of jeopardize the blockchain itself. And unless we see increased transaction fee volume over the long term, that security budget is going to get a little bit tricky. So net, I'm open to the increase that we've just seen.
Yeah. I mean, unless it hurts it long term, but I do think that knots coming out, although I'm not really a fan of either. I wish we could just sort of stay where we were. But I think it is a healthy free market action. Well, let's try an alternative.
It is. You remind me of something, which is that governments hate competing. They hate it. When you go and you get a driver's license in California, and I live and get a driver's license in Texas, those departments of motor vehicles are not competing really, which is why the experience is not always the best. The only place where governments historically have competed are their economics and then their defense budget and their defense industrial complex. And so what's been interesting about this from a Bitcoin perspective is that, to your point, a little bit of competition injects a bit of rigor. So I'm glad that these discussions are being had. I'm glad that there's a debate back and forth. To your point, changes can be made. They could be reversed or retracted if it was being seen as jeopardizing the ecosystem. You really want to avoid a monoculture. That is somewhat of what we're trying to escape, is this hegemony, right? And this inability to get out of the fiat debasement situation. And so part of that is offering a competitive alternative. And for things like knots, as an example, if they're willing to present an alternative, if people want to vote with their feet, we'll channel our inner crypto libertarian and we'll see what they do.
Yeah. I've heard of a third one trying to get some legs under it, being run by a nonprofit that would run a third option that'd be more of like an ossified code base. And it would only implement extremely urgent critical patches, and it would not do any improvements. So yeah, I'm all for the competition. That seems to be where I would lean. Like, let's not try to make things better. That's what Saylor's been talking about. The best way to ruin something is try to improve it. So how about we just, if there's a critical patch, we can put that in. Otherwise, let's just leave it as is. I think layer 2 should figure out how to move around layer 1, not the other way around.
I like that. I like that a lot.
Hey, if you like this short conversation I just had, you're going to love the full-length conversation. Don't miss it. You can go ahead and click right over here, and I'll see you over there.